Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, April 9th, 2026. And it is 11:35 a.m. Eastern Time as I'm starting the video. Just wanted to share my thoughts, give a brief update. I will do my best to keep this one quick. I know I say that often. They go, 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 and get me talking about the charts. All right. So I'm back into crude as a short, and that was just a phenomenal hedging vehicle that actually netted out. Instead of just neutralizing the shorts. I told you my trading plan on the QQQ, the NQs, and I'll get to that in a second. So the big drop, we milked all that, covered the lows, played the initial bounce, and then told you just shorted again. So you have you can see it there. It's a little minor uptrend line. So that 102, little above 102 is resistance, and I gave you some pullback targets. And that puts me back into a fully hedged position. I have a pretty decent short and probably over, more, again, you have to net it out. I told you the other day, CL has been going up about 2.5 to 3 times, in some cases more, some days less, but about close to 3 times the move in the NASDAQ. So if you are going to hedge, you keep that in mind, that you don't need, it's not a one-to-one short. And again, if you want to overhedge, that's what I'm doing right now. I've got a pretty heavy short on the crude. Then you can, adjust that position accordingly. All right, so let's move on. SCO is one of many. There's a lot of crude tracking ETNs and ETFs out there. Long, short, non. USO is the the initial, the original one, but this is SCO here. And we're just make sure to account for the leverage. That's not a Z. That's supposed to be a 2. I'm just hand draw. I don't have a letter tool. So that's I believe 2 times short. One alternative, if you don't, and you can use that inside of IRAs or non-margin accounts where you can't short USO. And remember, I also always tell you there's a lot of futures out there. CL is the regular crude contract. I think it's QM is the they call it the mini MINY, and then you have the micro MCL. So you pick your poison. They're all the same chart that I give you on CL. They just have smaller leverage factors. So again, I'm gonna right now. I am completely hedged. I'm going to hold on to these index shorts through today, most likely. I told you my plan initially. Let's go to that on QQQ. After reversing, expecting a bounce off T2 when that was hit, gave you a bounce target zone, and then the Taco Tuesday came. So my plan was to add swing shorts up to that point, and that would be the full point. But I got a gift, already being short crude, that exploded. Exited that with impunity and reversed it at the lows that night, and also then started adding and went to a pretty aggressive and a full short position now. So my plan is, as I've told you, it was all the better entry. I didn't initially plan to add. That initially was my no-go zone where I would sit tight, wouldn't stop out, but wouldn't add. But then because we gapped up and that huge spike up in the after hours, and then yesterday, that's where I've added. So I have a pretty aggressive, close to about, again, full is relative because there's always dry powder with margin and whatever I can add, and overweight, but pretty good short position right now. And now I'm also, that is overhedged, if you will, with the short on crude, or at least, I'd have to net it out. It's close to a full hedge. Again, adjusting the fact that crude moves up and down more. And I feel good about that. So I want to let you know that the lots that I did add, I'm not going to give a lot of room to. Let me go down to the 1-minute charts. Here's what I'm watching on the 1-minute charts. There's yesterday's high, much above there, and you can see this little trading range. So this is, and I just right before the video, I had across other accounts, I have multiple. I have swing trade accounts of IRAs, college. Coverdale College education accounts for the kids. Those, unlike 529s or brokerage accounts, you can buy whatever you want in there. And so those are, when I talk about the longer term typical swing and trend trading accounts, those are that. But that's resistance. And so if QQQ pops it, we're probably going to go up. And then I'm going to start to remove. Like I said, I am hedged. I'm going to wait to see how today finishes is my initial thought now. You know me, my trading plans. I have a plan, but I sometimes will modify that plan, as I did on the big Trump taco pop on Tuesday. Adding shorts and the whole logic was it was a better price point, and I'll keep stops somewhat tight on those, or remain hedged on crude because I still feel very strong for that whole logic that if and as crude continues to tick higher, here's USO. That 60-minute chart I gave you, we hit T2 there. That's also where I covered that night and reversed it. But if and as, especially at this point, crude continues higher, it's going to be and it has proven so far to be just a shackle or a weight. What is that? In old prison movies where they had the iron shackle on the prisoner's ankle with a big lead ball. That's what it is to the market. So, it's to me, anything's possible, I always say, but I talk in probabilities, not possibilities. To see crude do this and the stock market do that would be extremely unusual. So, like I said, I think I made my point that that's a good way to go. So, let crude fall. And then I can assess today and see if anything, any breakout above that level. Let me go back to the QQQ, and that's just a 1-minute chart. Oh, too many Qs there. So there's that recent cluster of trading ranges, and again, you can see it on a 1-minute chart. Price alert set. We break this. There's a monster gap. That's better than 2% if that gap gets entered and backfilled. Gaps once entered are usually backfilled. That's over a 2% drop. SPY, the bottom of the range is not as well defined, but close to it. You have this is a level, so you have alerts here. So this is pretty much what you're looking at here. These markets are going sideways right now, waiting to see pretty much. We also still have some more economic reports tomorrow. And so I'm giving a little bit of room, like I said, for the reasons I stated, both being indirectly hedged, and that's been playing out well. And I want to talk on one more trade. Somebody asked me about, I think it was Mike, about SanDisk today. And my reply was it currently offers an objective short entry or add-on. Give you price target. This is a trade idea that I gave you recently. We broke down. This is a bearish rising wedge. There's our primary uptrend line. There's our divergence. We've been building a series of divergence that just keep getting steeper and steeper. A lot of potential, a lot of meat on the bone on this trade. And, so I said it offers an objective entry on the back test. After it broke down, it's been back testing. Still a marginal new, still divergent high. 2 current price targets with potential targets. But it's going to work out if and only if, most likely, if the NASDAQ 100 and the semis, because they will go hand in hand if they go down together. So let's look at semis real quick. I want to talk on that because we have an active trade, and I may modify the suggested stop because we're currently testing it today. And again, for all the reasons I stated, I want to see how we get through today and tomorrow and this week. I mentioned that yesterday also. I'm going to loop back real quick before I forget, in case you missed yesterday's video. I'm putting a very high weighting because I've had some long-term sell signals on the weekly and even monthly charts, some trend indicators flip. I'm wanting to see how this candle closes the week. That's kind of my overriding plan. So anything today, intraday tomorrow is noise. Let's see. I'm still leaning towards a move back to close back on or down below the dual resistance level, which is the weekly. It's the weekly chart, but the downtrend line on the weekly, and then the 200-day moving average, price support. So, any close like this on Friday, again, from a technical perspective, is nothing but bullish because that's a breakout. That's a whipsaw move, drop below the 200s and a move back above. But again, if you trade off the weekly chart for your swing and trend positions and wait for those weekly candles to finalize, I mean, here's a good example. How many folks bought the new highs right there in the Nasdaq 100, only to see by the end of the week we had a big reversal and put in a giant bearish engulfing candle, which so far has marked the high, the top, and yeah, and so that's how that works. So right now, although we are at this moment above the 40-week, which are also the same as the 200-day moving averages, it's only an intra-week move back above. And so let's see how this candle's finalized. That's me. So that's why I'm holding on. That's why I'm going to tell you right now what I'm going to do officially on SOXX. I'm going to modify the suggested stop on that trade. We're profitable. We hit our first target. We covered that day. That's when the stock market hit T2 QQQ. So I expected a bounce there. We've had a bounce. And on this trade, I'll have to look to see exactly. Can't remember if we shorted there or before that or wherever. Well, no, I think it was on a kickback. Yeah, we did. I think it was right here. So we're slightly, well, actually, again, guys, it's relative. This is why performance stats aren't published. Everyone's trades differently. I use multiple targets. Some accounts I'll book full profits. Some I'll book no profits. I'll hold out for a next target. And some I'll take partial profits. So everybody's different. And there's, like they say, there's many ways to skin a cat. Well, there's many ways to swing and trend trade. So had you booked profits there and even reversed it as which was my preference on the stock market, as I told you, expecting to bounce, then you would have booked the full profits, whatever it was. I think we shorted 345 on that kickback. You would have made a quick 9%, and then you would have went long and gamed the bounce. The most objective level would have been to bounce it back to that 345. You made another 9%, so you're 18 net. And now, so the max stop, as I initially gave it to you, was on a stop on a stop on a close. That means a daily close. It's a daily chart above 372.80. So I'm going to right now make this official. Suspend until through tomorrow. Suspend, or let's just do a weekly. Yeah, that'll be perfect because that's the same thing on weekly close above that level. And I'm going to put a little asterisk so we know that I made that modification today. And that was, what's today, the 9th? 9 modification. Okay, guys. All right, so this is, like I said, this is just being adaptive because I want to see how we close the week, see where we get through. And again, for me, I have hedges, and this includes when you lump this in. This is going to move with the Nasdaq. It just has a higher beta, so this is a extremely high correlated trade. And of course, if you don't know that or you're not familiar with how the markets work, just put up a chart of QQQ, and you'll see QQQ and SOX are one and the same. SOX just moves up more. They're the same top holdings in there. At least the semi part of it, and Nvidia, AMD, Micron, Broadcom. So that's it. So that's my current plan, and because they're buying it right now, the indexes, and for all the reasons, we're still above. Like I said, it's my move was somewhat aggressive. I explained the reason for adding back those shorts, but then I also explained to you the reason for hedging them up today. This is extremely, what do you call it? Anticipatory is like the word I like to use, not just aggressive, anticipating that breakout may fail. And if it doesn't, this is where things start to change. I told you before, the midpoints of the trading range on both QQQ and SPY, and that's QQQ has it about 614. So you're up to date on the semis. Oh, let's go through the semis. XSD is the most diversified. This is really an insight to a much more representative index or ETF. And it tracks the S&P 500, or not 500, the S&P semiconductor sector, which is more diversified. You can see as of in beginning of January, it's much more evenly spread out. 3% on the top holdings, 3.3, 3.2, whereas SOX is highly concentrated. SOX was the first to market semiconductor sector way back in the 90s, even before during the dot-com period. But it's flawed in the same sense the NASDAQ is. It's flawed if you're in the sense that it's not as broadly diversified. You only have 30 holdings, and of that, and this may have changed, NVIDIA's by far just the top handful. I did it here, the math for you as of January 5th. The top 3 holdings alone make up about a quarter of the returns. And you go down to the top 10, I think that's what I did there, and you're at 56%. Half the returns come from just 10 stocks, over half. And then that XSD, for example, when you go down, the top 10 is only 29%. Just trying to show you that you're going to have that. These guys have the biggest impact. So again, and it cuts both ways. When the tide turns, this one will most likely fall more than SXD. So just wanted to get that out to you, give you my thoughts, and the importance of hedging, and then the other stuff. What else do I have for you? I mentioned a few yesterday. CCL, really liking that on an add back at the 200-day. This is one we've shorted. We shorted way back here, I think, on that break. Hit my first target. Been dancing on it for weeks. Bounced, of course, with the market. That's when the market hit support, bounce, and a perfect re-entry back to the 200. It was down a little more, but a nice rejection. That's what I wanted to see so far. And I still maintain these targets here for this time being. And your stop will be based on your average entry price, delta as well. Perfect back tests. I think I highlighted these two. I'm not going to go over each and everything. Again, these were in yesterday's video. And so, in keeping with what I said, let's keep this one short. There are a lot of other things. If the market can power through, if the straits open up, and there really is, some kind of a lasting abatement in the Middle East. So first of all, crude's going to fall, and fall pretty big. As I told you before, you have longer term targets right now. I just wanted to get that short in there earlier when we were at that resistance level. I felt a high degree of confidence that would be our stopping point. So far it is. We reversed right off just a hair above 102 on CL, and so like I said, when I feel confident, I will remove one of the two. Being short the equity markets and short crude right now is like I called an indirect hedge, and so it's kind of a lock on profits I've made recently, without again. If you're new to the site, a direct hedge is if you're short something, you buy a call on it, or if you're long something, you buy a put on it. But I told you that's not very cost effective when volatility is high. Due to the elevated risk premium. I'm going to move that trend line right there on Delta. All right, guys, we'll wrap it up. I'll keep you updated. And again, let's just see how the day finishes. Watch those little micro ranges on QQQ. There's a previous high as well that's significant. Traders always look at pivot highs. And same thing with SPY right there. SPY's a little bit above it, but QQQ right now testing about the top of the range there. You can put the line there. You can put it on the previous high. And so, sustained breakouts bullish, and a failed breakout. If you're looking to, let's say you want a short, you think this is going to get faded, wait for a fallback below there into the trading range, because that means this whole thing will be a false breakout, just exactly like it was right here when we had this trading range in the S&P 500. And we had a failed breakout, a couple of them there, fell back into the range and then down below. So that's the story of the market, guys. I'm going to wrap it up here. I will give you updates, but like I said, I'm just keeping it kind of narrowly focused now. We've got other things here or there, but like I said, it's still crude in the market. Market's rallying right now, and it's built on, it was down earlier. And, with that reversal in crude, like I told you, and again, if you're brand new to the site, I'm going to show you one last time. Been covering this chart for a while now. Let's go to a 15-minute and just show you, especially recently, what crude has been doing to the market. So we go here to comparison tool. No, sorry, guys, I had it queued up on a 5-minute. I've been doing the 5-minute for you lately. Edit chart properties, compare, flip crude upside down, that's SCO, and you can see the tightest correlation you've seen in a while. So, and again, that correlation only goes one way. If crude falls, that's net bullish for the stock market. Crude falling, of course, I flipped it upside down with the purple with the SCO, but you can see just how beautiful that relationship is. And again, that's like I said, well, as long as that works. And then if crude gets back down below 90, 80, the market doesn't worry about it so much. And then that correlation isn't as tight. But right now it remains tight. So we're going to trade it that way. Or at least I will until it stops. And I'll let you know if and when I decide to undo or remove those hedges or go the other way. All right. This has been Randy Finney with Right Side of the Chart. Have a great day.